What's going on, guys? It's Marcus from CoinTrader, and today we'll be going over our next lesson, adding the Fibonacci retracements to our crypto toolset. So, first of all, we'll go over what Fibonacci is, how it's used, what it identifies. We'll go over some real-world examples and some current trades I'm about to get into using the Fibonacci retracements. Alrighty, so we'll start off with what Fibonacci is. So, using TradingView, this is the TradingView platform, as you all may know. Heading over here down to the third one, click this arrow. It'll normally be selected as pitchfork, so it'll normally look like this. So if you go ahead and select this arrow, scroll down to Fibonacci retracement, this is it here. And then it'll highlight over here. Now, what Fibonacci represents is it represents the market sentiment and potential levels of trend reversals. It can act as a sort of support for the price action. So oftentimes you'll see the price fall to certain levels of Fibonacci, even though there may not be price action support there. Now I'll give you some examples of this currently. So firstly, let's show you how to use it. So this is Bitcoin, again on TradingView. Now we've selected Fibonacci. Now on a Fibonacci can be drawn many different ways. What I tend to draw it as, some people tend to draw it from the bottoms to the top in an upward trend, and from the tops to the bottom in a downward trend. That's the most common way. Normally I always just draw from the bottoms to the tops regardless of the current trend. They both kind of give the same sort of effect. One's just in reverse, which makes hardly a difference. There's probably some people out there turning over in their coffins with me saying this, but I believe there's no real trading difference. I mean, there might be slight differences, which professional traders might know, but for the average trader, it's pretty common just to draw it from the bottom to the top, regardless of the trend. So, for example, you start off drawing it from the bottom of the current trend. So, for instance, this run-up trend here, the bottom, like the start of the trend, is this point here, right? Or you could draw it from this point here. Doesn't make a whole lot of difference. Now again, we're on the 4-hour chart, so Fibonacci can be used long term. For instance, on the weekly, or it could be used on the shorter term, for instance, the 4-hourly. Let me just slide this over here. So I tend to use it on the 4-hour because it kind of, anything lower than a 4-hour gives too much price action and not enough how would you call it, like not enough solidarity in the moves, you know, because if you see major swings such as these ones in the 30 minutes, it's not as solid as the swings in the 4-hour. So again, select Fibonacci over here, and you start from the bottom of the move, which again is here, and you'll notice it kind of gives this rainbow effect. So you draw from the bottom to the very top of the move, to the very top of the wick, which is here. And now you'll see a couple different levels here. You don't need to worry about anything below the move. I've never used that. I'm not entirely sure how to use that, so if you do plan on using it, maybe do some research on that. We'll mainly be focusing on this area from the, it's kind of hard to see over here, but this does say 1 over here, and then it gives the price action. So this 1 is the start of the move and the price the move started at. So again, this is the 0.786 mark, and this is the price at that mark, 6.18, and the price 5, and the price, and so on. So now again, it resembles the potential for trend reversals, all right, or price action reversals. So it allows for users to time the market more effectively and to time the bottoms of a move more effectively. So for instance, we've started this move here, and this is the top of the move here. Alright, so now you draw again from the bottom up, from the bottom of the move to the top of the move, and we're immediately presented with this like rainbow sort of effect. and different lines representing where possible trend reversals could take place. Now, a common analogy that I've heard is a discount, right? These are considered discounts. So imagine a TV, right? And the TV, let's say this up here is the $1,000 mark, right? And this is the $0 mark. And so let's say the TV right now is $1,000 up at the very top here. Ignore the Bitcoin price. Let's say this is $1,000 here, this line, right? So this is the salesperson trying to sell you a $1,000 TV. You're not going to be so inclined to buy a TV without any discounts at the maximum price it's sold for you. So buying here is obviously a silly idea. Now, if the salesperson asks you or offers you a 23.6% discount, now you just got $236 off your $1,000 TV. That made it a lot more incentive to buy, right? So you can think of it as a percentage of a discount. You'll be more inclined to buy at the 38.2% discount or the $382 off your $1,000 TV. Again, you'll be even more inclined to buy it 50% off, and even more inclined to buy it the 61.8% off. And you'll obviously almost always buy at the 78.6% off. All right, so now you can also think of that as percentage of people buying. So for instance, 0% of people will be buying at the very top, right? Because that's the top, no one's buying it past. 23.6% of people will buy at this level here. 38.2% of people will buy at this level here. 50% of people will buy at this level here, and 61.8% of people will buy at this level down here, and so on for this one. So what this incentivizes is it allows you to time the market more effectively. So my often favorite area to buy in is between the 50% off and the 61.8% off mark, around this area here. Now the reason this is like what I like to call the sweet spot is because it allows for, this is what I like to call, well, let me drag it. Yep, there we go. So this is what I like to buy in the sweet spot here. Almost always you'll see a trend reversal at the 61.8 or the 78.6. These two, you'll almost always see a trend reversal here. It's more common to see one here because if you set buy orders down here, they might not hit. For instance, this one right here would not have hit. So I like to scale my buy orders from around here, just before the 50 and just before the 61.8 is where I like to scale my buy orders. So again, the sweet spot here, this is where you want to be buying. And then because there's almost always a trend reversal in this area. So for instance, if we had seen this move and we saw a reversal here and we saw it start going down, we would have pulled up the fibs like we have here, and we would have gone, all right, where do we want to buy? We want to buy in between this area here. So you know what? I would have bought exactly right here, no matter what the price does. Now, so if we had timed this, let's say we bought right here in the middle, we could have pulled out profit here. That's a 10.5% move. If we had held, we could have pulled profit either further higher. That's a 15% move. Or you could wait for a full trend reversal and buy back up here at the top. So again, that would have been up here at the top, an 18.5% move. So this is kind of the basics as to Fibonacci. I won't go too much in depth, mainly because one, I don't know too much about it, and I don't want to give you guys false information. Now, so let's go on to an example that I'm currently looking at now. Is the Vox, which has some crazy volume today. One of the top trending coins on Bittrex because of this massive move. It had a 110% move. And so when I see a big move like this, I immediately think fibs and where can I buy in, right? You never want to buy in at the top here. That's silly. So immediately I see this and I go, where can I get in on fibs? So again, start of the move right here, down all the way up to the very top of the move right here. And now I can immediately see my sweet spot. Again, it would have been right around here. Now again, this would have been before the move, so I wouldn't have bought in here. I would have, my buy order right here would have triggered, which I honestly didn't have one. because I've got a big buy order down here, and it doesn't look like it will hit, which is unfortunate. Although, if you did have, I should have followed my own tips, and I should have put a buy order here, and I should have put a buy order here. Well, I've got a big buy order here. I didn't have one here because I saw this steep decline here, and I had a buy order here this morning when I saw this move because it was about here, and I put one here. And the reason I removed it is because I saw this massive red candle, and I saw it blow through this. I took my buy order away because I thought this is ridiculous. This thing's going straight down to the 618, maybe even the 786, because I saw there was a support here and I saw there was a support here. So I was going to scale my buy orders further down on this move because I thought it would fall further. Turns out I was massively wrong, and I could have profited from this nice little move here, but instead got a little bit too greedy, put my buy orders a little too low. That's something you guys can learn from. Anyway, learning from my mistakes. Again, sweet spot right here. I ignored my own sweet spot, and sure enough, I didn't profit from it. So again, guys, draw from the bottom to the top, and you can kind of see where the move's going to. 50% of buyers will flood back in here, and sometimes that's enough, along with a previous support. Sometimes that's enough to push the price action back up. 61.8% of buyers. So the majority of buyers, or half the buyers will flow back in here, and the majority of buyers, over half the buyers, will flow back in here. Right. So. This again is extremely common to see a trend reversal here, and a little less common, but fairly common to see one here, right? So again, I'd scale my buy orders. I'd have a buy order just before the 50, just so it hits, because sometimes they can bounce really close and bounce back up. So I'd have a buy order just before the 50 and a buy order just before the 618. Now my buy order before the 618 didn't hit, obviously, because it didn't reach down there. If I had one here, let's say I had one right here, I could have profited. I could already be up 21%. Instead, I got silly, I got greedy, and I didn't make any money, which is unfortunate. Let me show you another real-world example that I'm also looking at currently. Again, block ticks, one of the highest trending volumes on Bittrex because of this. Again, 117% move. This is still in its early infancies of its drop, so this is a great time to look at it. Again, 23.6% of buyers flowed in here. You can kind of see some resistance there. 38.2, it hasn't hit yet. As you can see, it's holding right here on this 236. So when it breaks through, we'll see. We've got some previous resistance. This will be previous resistance, which will now be support around the 382 mark. And again, I've learned from this mistake because I could be up, if I timed it properly, I could be up 23%. Instead, I'm not, so I'm going to time this one a little better. I'm going to have a buy order set just here. As you can see where this one hit, I'll have my buy order right there. And I'll also have a buy order just before this support right here, probably around this previous support just there. All right, now these two buy orders, I'll have a smaller one here and a bigger one here. Now if this small one hits, I can make 20% easy. If this big one hits, I can make this, I can dollar cost average to around here and make a solid 30% move on the second bounce of this coin. Yeah, that's about it for Fibonacci retracements, guys. If you have any questions, please comment down below. I'm more than happy to help. This is a very basic rundown and how to time the bottoms of markets. I'll do another video probably in the next couple days going over some more tools that you guys can add to your trading set, and then I'll be talking about what my long-term investment strategy is, and how you guys can make some pretty awesome gains from doing just about nothing. So that's for the next couple days. Until then, thank you guys very much, and I'll see you in the next one.